Hi, this is Jeffrey Kerr at Kerr Financial Group. Today is Friday, August 9, 2024. We've made it through the week. It's been an eventful week. I just want to touch upon a couple of items that I think could have impact going forward to the markets and the economy. One is the carry trade concerning the Japanese lending and the Japanese yen. And briefly, it is, the low interest rates in Japan have perpetuated this trade where the institutions and investors borrow money in Japan at virtually zero interest, and then invest it not only in Japan but elsewhere across the world. Well, recently the BOJ, the Bank of Japan, which is Japan's central bank, raised interest rates, not a lot, but albeit they haven't done any raising in years. So this now, changes kind of the dynamics of the yen carry trade, and the Japanese currency, the yen, strengthened. So that disrupted the yen carry trade. To kind of quantify it, Deutsche Bank estimates that the yen carry trade is $20 trillion of value in the markets. I've seen other estimates that are not nearly that high. And also, I've seen some language from JP Morgan saying they think it's 75% unwound. I'm not sure I agree with that. I mean, this has been going on a long time, and I still think there's some fallout from the changes with the BOJ, the strengthening yen, higher interest rates, and the unwinding of the carry trade. Second thing that I wanted to touch upon was last week's U.S. job number for July, which was pretty bad, and also marked the fourth consecutive month where the unemployment rate went up in the U.S. And that usually, leads into a recession. Now, whether we do that or not, it's hard to know. Many are saying that we're already in a recession, and I think these two things really put pressure on the Fed. How delicate it's going to be for them to act. If they do a surprise intermeeting interest rate cut, even if 25 or 50 basis points, I think it panics investors and panics the markets. So that would be, I think, dangerous. If they do the September, wait till September meeting, the first week of September, they do the cut there. Do they do 50 basis points? Do they do a quarter? I think if they do too much of a cut, that you risk bringing inflation back in a higher levels. And I think that's something they want to avoid. And so there's a lot of pressure on the Fed to, how they're going to act. And the markets clearly are watching and begging for cuts. But I think that they've got to be careful on how they proceed. And with the inflation balanced by a slowing economy. So, and also, the stock markets and the bond markets in the U.S. are really looking at the Fed for direction. And that may be, the continuation of this turmoil that we've seen recently in the stock market. Have a good weekend. Thanks for listening. We'll talk on Monday. Thank you again. Goodbye.